What's going on, guys? I'm Jelfri. I'm going to be back testing AUDUSD on the 4-hour time frame. I chose this time frame because I feel that it's a great time frame as it's a balance and one that's good for entry, one that is also very good in terms of market structure. So here we are in March of 2017. We're going to go over a couple months here overall. Here coming off of February, we have a drop, a break of this market structure here, right, proving that we are now bearish. And as you can see, the filling of this inefficient price action here, right, price comes back to retest it, and you could see the pattern here, right? We have a correction in one direction, right? Redistribution of price coming back up to the previous structure up here, right? So what this helps with is overall understanding market structure and what you can expect when you're looking at a type of correction that follows this kind of pattern over here, right? So let's continue on. So what's interesting here is we have a reaction over here that leads to a break of structure in the other direction right here. See that break of structure? And that was based off of, you can see this here, price reaccumulated, corrected downwards, moved up. Here we have a compression of price action, right? Price here is compressing itself, clearing inefficient price action on the bottom, creating liquidity on top, right? So always when you're looking at these types of areas of consolidation, there are overall Wyckoff schematics that you can be looking for. So in this example here, right, there's liquidity on top as price challenges the lows, as you can see from this wick here, right? There's a clearing of liquidity, and as we continue about, right, we move up, clearing this liquidity, building even more liquidity, and as you can see, price challenges the bottoms, right? We're clearing stop losses on the way bottom, on the way down, and on top, we are having the same type of clearing happening, but they are relatively equal, especially on these wicks on top over here, right? So let's continue. So we have this reaction here that seems to have happened through this space here. As you can see, this seems to be an area of strong demand, right? So you could use that as a confluence, as well as this reaccumulation that occurred right below it. Price came up, right? Broke minor structure, and by minor structure I mean this here. And as you can see, price came back to mitigate that. So you could use these type of market structure confluences, such as seeing this as an area of demand, proven by the reaccumulation here, by these wicks here, right? And you see this strong bullish reaction upwards. And you see price come back to retest on a clear sell to buy right here on the 4-hour, right? So that would probably have you with a 9-pip stop loss, right? And just to see overall risk to reward, we're seeing, like I said, about 9-pip stop loss, and I would say a good area for TP would be wherever you see these wicks, because there is still how can I say, liquidity on these wicks. Retail traders are looking at these wicks and saying, it's going to be safe to put my stop loss here, right? Well, not necessarily. But what could happen, besides this strong bullish action here, is price comes back and wicks it even higher, and then continues downwards. That's also another possibility, right? But for that reason, we're here backtesting. I'm not really using the replay tool, as that's not a tool that's accessible to everyone. I want to show you guys a way that you can backtest despite not even being able to use it. So let's continue about, all right? Okay, so here we have, this is the last area of structure right here that was broken. And as you can see, price came in, dipped into it. So we have strong bullish action. And as you can see, price took a corrective move downwards, right? So the intention of this correction downwards, right, is to fill the inefficient price action here toward the left, right? So once this is filled, right, then you will see the intended direction of the market once it gets to the structure that was previously broken, not this one, but the higher one over here, right? So price comes in towards this structure here, right? And we see a bounce out of there, right? In terms of looking for an entry here, perhaps a higher time frame, you know, looking at this area here, right? You may see a an entry, as you can see here, right? This is the last sell candle before, you know, we moved up without stopping. And I'll say, you know, you could say this is the last one. So from here to here, right? Let's just say this is just one big bullish candle. I mean, yeah, bullish candle. And then from the way down, this is your bear candle all the way down here to the last sell candle before coming back up, right? Sorry, I overdrew that a little bit. Bear with me. So let me actually use these rectangles. So we started here, right? There you go. Now let's fill that in. That's your buy, right? And then let's go to that last cell down there, right? Let's match it. Okay. So this is your typical fresh supply area. Once you see that the whole point of this buy was just to drop, this zone right here is your fresh supply zone right here. This was the last area in which buys and sells orders were being fulfilled. Here, only sellers are being fulfilled, and price would do as I said earlier, you know, correct, fill in that inefficient price action, come back up here to where it was last balanced, go back down, right? So it's not, how can I say, you shouldn't really focus so much on just looking for, I guess, an engulfing pattern, but it's overall just understanding market structure, understanding the overall move rather than just looking for something, how can I say, platonic. We have to be very, very knowledgeable if we want to be, you know, have longevity in this business. Okay, so let's continue. All right, so as we see here, as we move down, right, price continues down, breaks this market structure, so that proves further bearishness of the market, right? So I don't know if some of you guys may look at this, right? This here is an example as a possible buy area. So my concern with that is you may have possibly see this as a strong demand area. My concern with that is the fact that we had this buy up just to sell down, right? And when you see this type of manipulative action, you should be wary of, you know, of this here, like trusting this that goes against, you know, the buy to sell, because the true market direction, despite the fact that this is very strong buy momentum, the only point of this really was just to clear, you know, retail stop losses that were to the left of it, right? This doesn't really mean that, oh, that the Australian dollar is doing amazing. Like, it's all about grabbing the money of the masses here. That's what this chart represents. This represents human emotion and how to manipulate human emotion in order to you know, seek profit. Now, once you're able to understand that part, then you should try to look inwards and say to yourself, how am I allowing that to happen to myself? And how can I go about not letting that happen anymore, right? So let's continue. All right, so like I said earlier, we have this break of market structure here, strong bearish momentum, price continues, right? So as you can notice, like in these areas of structure, you know, you can have little bits of reaction. You could possibly maybe scalp it, but it's more risky trying to trade like that because there's no certainty. As you can see here, right? There's all of this structure happening here, and price just shot above it, right? So scalping in that regard will be dangerous to do. All right, and we continue to go down in a series of, you know, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and now we have here, right? Demand coming in into the market. I'm not saying that there's a method of entry here yet, but please bear with me. So with this demand entering the market now, let's look to the left of it, right? We're seeing this areas of structure, right, being broken right here. So what does this prove to us? That possibly we can get reaction if we return to the previous structure, which is what I would recommend that you do when you're looking at possibly entering the market. You should look at possible areas. I mean, you should look for a break of structure and a return of the structure that was broken, okay? So as you can see here, start of the sell down. Let me bring back the rectangle tool. So the start of the sell down started there, and our buy up here, okay? Now that looks easier to trade, right? Now this is just overall understanding that, you know, we started selling here, right? After this push back up, this is our base. This is where price was last balanced. You guys are asking, why did I not start all the way up here? The reason why is because I'm trying to look for the most recent relevant information in regards to this demand that entered. So the most recent would be just the push down that happened right to the left of it, okay? So we have this strong demand here, and as you can see, to the right of it, price comes in, and we have entry, okay? So this right here, let's see, let's pull out the fibs. So the reason why I want to pull out the fibs is just to see overall, when you're back testing, you want to see where in this base would price action most likely react. So this is AUDUSD, for example, right? So let's see where it seems to react. So we have that 50% right here. 50% of the base of the move down, price came to that 50%, pushed up, right? I may have done the fib upside down, but you know, 50% is the same regardless. But yeah, as you can see, price came to that 50%. If you were to, you know, put your entry there at the 50% of the overall push down of that base, you know, you can put your stop loss. Let me see. Yeah, you can put your stop loss right there, right beneath that sell, right? 16 pip stop loss, and take profit would be, so if we were here, right, I would be looking to overall take profit all the way up here. You know, price didn't get up there, but we got up to 1 to 5 at least, and that's good enough to take profit than to try to, like, you know, go for the whole thing, because you risk, you know, the longer you hold, you're risking possibly losing that profit, right? So that would require some trade management. Okay. So we continue this sequence, right? So we have a higher high and then a lower low. So once you see this kind of happen, a break of structure, this is your area of interest now, where price broke structure. Where structure was broken, it's likely to come back, retest, and then continue about, right? And as you can see, we came back here. So it's interesting because we could trade both the demand area and the supply area within this structure here, right? So as we look to this here, right, the start of the buy up started here with this candle here, right? And then the sell down to about there. See where price reacted. As you can see, that 50%, it's very good. It's very good. So let's say you put your entry there, right? This is just overall structure again. So I'm gonna put it right. So it's about 18 pip stop loss, right? And we're gonna be trying to match this low right here for our TP. And that'll give us about 1 to 4, 1 to 5, right? And this one hits the TP, okay? Now we could just do the same, right? Lower high, lower low, lower high. Well, I wouldn't count this. This requires some discretion, but this is more of just a small retracement. But then this right here would be our lower high. So as you can see, let's draw it out again. So this is a bit weird because it includes Sunday opening within here. So there's like high manipulation going on here. So I'm just gonna disregard this and focus on what's, you know, easier to read. So it seems like this right here, or actually this down here, was the start of the buy up, because after this we didn't really like stop to, you know, correct downwards and come back up. So we have our buy start over there and about right here, not including wicks, just body. And we sold down to about there before coming back up. Okay, so let's see where price somewhat reacted, right? So wait, let me actually put the fibs right. So we have about that 71% entry here, 50% will do UI as well. Overall, I would go with 50% just because it's more consistent in terms of actually getting into the trade. 71% is good, very good, because it's a higher premium or higher discount depending if you're buying or selling. All right. Okay. Let's go through at least here until July, and then I'll wrap this video up. Okay. So let's look at this here. We have a push down, right? And then, you know, same rule applies as always. See that? That's our buy. This is our sell. You know, you got the sell. Put one entry there. You know, as you continue to backtest, you realize where price tends to react the most. Here, you would have missed with the 50% on this line, but with the body, you know, the buy started here before coming back down, right? This hit the body and gave us, you know, a good reaction off of that there. Let's see. So it didn't really break this market structure, so it continued down, but it didn't get to break this yet. So this seems to have proven to be a demand area. You know, see this reaction is pushed back up. Okay, so I would say this zone right here is a possible area of interest in the near future, or you know, whenever price comes back there. No rush, you know, let price do its thing. Here we have a demand, right? We have demand, and then this is our last structure. Price comes back to retrace that, right? Very subtly. You know, it's not looking like the reaccumulation we looked at right here. See? You know, they're not all gonna look the same, but somewhat you can understand that the pattern is overall a slow and slight correction downwards. See this as proof of demand, and then a retest of this right here, right? Price comes back up, and then look, another reaccumulation. See the same concept, correcting downwards, you know, slowly until reaching the previous area of structure. Okay, this previous area of structure. All right. I hope you guys found this here helpful. I'm gonna wrap this video up.